Rivian Automotive is currently trading at $17.74 per share, marking a solid intraday gain of 3.44% as of 12:37 p.m. EDT on this Thursday, April 23, 2026. While most retail investors are busy checking the ticker on their mobile app or scanning headlines for news about the latest R2 delivery estimates, there is a much more significant movement happening beneath the surface that the broader market is seemingly overlooking. The standard expectation for Rivian right now is that they are in a survival race against time, trying to burn through less cash while they ramp up their mass market offerings. The reality, however, is that Rivian is quietly transforming from a pure-play electric vehicle manufacturer into a diversified technology and software licensing firm. This shift was recently underscored by their massive joint venture with Volkswagen and a fresh $6 billion loan commitment from the Department of Energy. These aren't just lifelines, they are fundamental shifts in the business model that could redefine how we value the stock compared to traditional automotive players or even high-growth tech firms. If you've been monitoring Rivian stock lately, you know the narrative has been dominated by the production valley of death. Everyone expects the company to struggle as it transitions from the high-end R1T and R1S models to the more affordable R2 platform. Most people see the stagnant delivery numbers from 2025, around 42,000 units, and assume the company has hit a ceiling. But the reality that is starting to reflect in today's price action is the massive scaling of their software and services segment. Last quarter, while automotive revenue saw some pressure, their software and services revenue more than doubled. This is where the smart money is looking. When you use platforms like Interactive Brokers or Fidelity to look at the institutional flow, you start to see that the big fish aren't just buying a truck company, they are buying into an electrical architecture that other legacy automakers are now paying to use. This creates a curiosity loop for any serious investor. If Rivian can successfully license its tech while also hitting its goal of positive gross profit by the end of 2026, the current valuation might look like a massive disconnect from future potential. Looking at the daily swings we've seen throughout April 2026, the stock has shown remarkable resilience, climbing from the $14 range earlier this month to its current position near $18. This 28% move over the last few weeks hasn't happened in a vacuum. Trading volumes have stayed consistently above their 30-day averages, signaling that this isn't just a retail-driven pump, but likely institutional reaccumulation ahead of the April 30th earnings report. Macroeconomic pressures, particularly the shifting expectations around interest rate cuts, have made capital-intensive stocks like Rivian very sensitive to every bit of Fed commentary. Yet Rivian is decoupling from that trend slightly because they've secured their capital runway. With over $6 billion in cash and the Volkswagen infusion, the fear of a near-term liquidity crisis, which haunted the stock throughout 2024 and 2025, is effectively off the table. This changes the risk-reward profile entirely for those using online investing tools to build a long-term position. The momentum we are seeing today also ties back to the sector-wide excitement around the R2 launch. Deliveries for the R2 Performance with the launch package are slated to begin any day now, and the market is pricing in the expectation of a flawless execution. This is the tension I mentioned earlier. The expectation is a perfect rollout that mirrors the early hype of the R1 launch, but the reality of manufacturing is always messy. If Rivian can deliver those first few thousand units without significant software bugs or supply chain hiccups, we could see a massive short squeeze. On the flip side, any delay would be punished severely. Institutional activity has been leaning toward the buy side recently, with several analysts upgrading the stock to a hold or buy rating, citing the improved margin profile. They are betting that Rivian has finally learned how to build cars efficiently. Now, let's step back and look at the core of what this company actually does and how it got here. Rivian Automotive isn't just a car company. They describe themselves as an adventure brand. Their business model is built on three pillars: consumer vehicles, commercial vans, and high-margin software. You probably know the R1T pickup and the R1S SUV, the flagship vehicles that put them on the map with their unique stadium headlights and quad motor setups. They also have a massive deal with Amazon to provide electric delivery vans, which has been a steady source of predictable revenue and a real-world testing ground for their fleet management software. This software, known as Connect Plus, is now becoming a standalone profit center. They are charging for things like autonomous driving features, specialized navigation, and even high-fidelity audio packages. This is a direct page out of the Tesla stock playbook, but applied to the outdoor and commercial segments where Rivian has a first-mover advantage.
Past performance has been a rocky road, to say the least. After a record-breaking IPO, the stock spent years in a downward trend as the company grappled with the high costs of building a factory from scratch in Normal, Illinois. They were losing tens of thousands of dollars on every vehicle produced. However, the older reports from late 2025 showed a turning point. They successfully stripped out massive amounts of cost by redesigning their zonal electrical architecture, which reduced the number of ECUs and miles of wiring in the vehicles. This wasn't just a minor tweak, it was a total overhaul that allowed them to reach for that elusive gross profitability. When you look at investment sites today, you'll see that Rivian's loss per vehicle metric is the one everyone is obsessed with. As that number shrinks, the stock price tends to expand. For those of you managing your own individual brokerage account or using a robo-advisor like SoFi Invest, it is vital to understand the expectation versus reality of the R2 and R3 platforms. The market expects the R2 to be a high-volume seller starting at roughly $48,000 to $60,000, finally making Rivian accessible to the middle class. The reality is that the R2 is built on a completely different platform than the R1. It uses a new 4695 battery cell that is cheaper to produce and provides better range. But the real hidden asset is the R3 and the R3X, the even smaller, rally-inspired crossovers that won't arrive until 2027. Investors are already trying to price in the success of the R3, which might be premature. The company still has to prove it can build the R2 at scale first. This creates a gap where the stock could be volatile as we wait for hard production numbers. Before we look at where this is going, I want to hear from you. Comment below how many shares of Rivian you currently hold, or if you're waiting for a specific price target to jump in. Do you think the R2 will be the vehicle that finally makes them a household name, or is the competition from legacy automakers getting too intense? Your perspective on the ground matters just as much as the charts. Looking toward the future, the catalysts are clearly defined. First, we have the official R2 delivery start date. Second, we have the deepening of the Volkswagen joint venture, which could lead to more licensing deals with other brands. Third, there is the potential for Rivian to leverage its new $2 billion robotics subsidiary. Imagine a world where Rivian isn't just selling you a truck, but also the autonomous software that runs a delivery robot or a municipal bus. That is the long-term vision that keeps the perma-bulls invested. However, the risks are just as real. Macro pressures, like a potential slowdown in consumer spending or a spike in lithium prices, could hurt demand for expensive EVs. Furthermore, the political landscape is always a factor. If government incentives for electric vehicles are rolled back, Rivian's path to profitability becomes much steeper. When you look at the total landscape of online investing, Rivian occupies a unique space. It's no longer a lottery ticket startup, but it hasn't yet reached the blue-chip stability of an Apple stock or NVIDIA stock. It's in that middle ground where the most significant gains and losses are usually made. For those who prefer a more managed approach, looking into Fidelity ETFs or Schwab Intelligent portfolios can provide exposure to the broader EV sector without the concentrated risk of a single ticker. But if you're a self-investing enthusiast who likes to pick individual winners, Rivian is arguably the most interesting story in the American auto industry right now. They have the product, they have the tech, and now they finally have the capital. The only thing left is the execution. To summarize the central insights we've covered today, Rivian is currently trading at $17.74, showing strong intraday momentum as the market begins to digest its transition from a struggling manufacturer to a technology licensing powerhouse. The expectation was that Rivian would run out of money before the R2 arrived. The reality is a fortified balance sheet and a diversified revenue stream that includes high-margin software. While the automotive segment has faced delivery stagnation, the software and services side is booming, and the upcoming R2 launch serves as the ultimate make-or-break catalyst. Institutional investors are watching the loss per vehicle metric closely, and the stock is showing signs of a major trend reversal as it breaks out of its yearly lows. Ultimately, the contrast between the market's nervous narrative and Rivian's aggressive technological roadmap is where the opportunity lies. If you believe in the transition to software-defined vehicles, Rivian is positioned as one of the few credible alternatives to the current market leaders. The path ahead won't be a straight line, and there will undoubtedly be more volatility as earnings approach on April 30th, but the foundation looks more solid today than it has in years. Maintain your discipline, watch the volume at the $1850 resistance level, and stay focused on the production ramp. Rivian has moved past the can they survive phase and has officially entered the can they scale phase. The answer to that question will determine whether the stock returns to its former highs or remains a niche player in a crowded field. Use the tools at your disposal, whether it's the Robinhood app for quick trades or interactive brokers for deep technical analysis to stay ahead of the curve. The market rewards those who can see the reality before the rest of the world catches up to the expectation. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell for more updates.